The more I learned about what a financial advisor does and the education that we can provide to hundreds and hundreds of clients and that butterfly effect that we can have as far as to help people, it felt to me that I'm doing my part of following my parents' footsteps as that noble profession, but in a different path, that you can still teach, you can still educate, and put people in a position that they can be financially independent. And at some point, they can make their work optional and then truly pursue their passions when you no longer have to worry about earning a paycheck. And then you can write that book, or you can do some research, or spend more time with your grandkids, or help those local charities with your skill sets that now you have. So those are the things that I see through my eyes as an advisor, that based on what we can do for clients, they can do a lot more in their own communities.
Welcome to the Active Advisor Podcast, brought to you by Harbor Capital. Join us as we learn from pros who have helped thousands of investors live better lives. I'm Bryan Moore, and I'll be chatting with some of the brightest minds in the financial advisory business, bringing you insights on practice management and investment research that works for advisors and their clients. Joining me today on this episode of the Active Advisor Podcast is Erold Merko. Erold is a chartered retirement planning counselor with over 15 years of experience in the financial services industry, and is also currently a senior vice president at Tenured Wealth Management under Raymond James. He specializes in creating comprehensive financial plans that help clients achieve financial independence, and his expertise spans the four wealth management pillars of asset allocation, income planning, incapacity planning, and legacy planning. He joined Raymond James in 2021 after a successful tenure at TIAA, where he previously led a team managing over $1.2 billion in client assets. Also, a huge part of his backstory is the fact that he's originally from Albania, having moved to the United States at the age of 17. Since then, he's built a remarkable career while also supporting his community through various charitable activities. So without further ado, welcome, Erold, and thank you for joining us.
Thank you for having me, Bryan.
Really looking forward to hearing your story today, and I'm sure the listeners are as well.
Thank you. Looking forward to sharing it.
Awesome. Before we dive into our conversation, I'd love to hear today, in your own words, a little bit more about your current role and what you're focused on.
Absolutely. So for the past almost 3 years, we started a private practice called Tenured Wealth Management with a longtime friend and business partner of mine. His name is William Burmeister. And we joined Raymond James. It's going to be 3 years in September of this year. And the practice that we run primarily focuses on clients who spend the majority of their careers at higher educational institutions, such as the local universities here in Metro Detroit, like Wayne State University, University of Michigan, Oakland University, et cetera. And also helping their spouses, the children. And now we have actually 3 generations of clients that we're helping with. And we've been really happy as far as being able to chart our own path under this practice, where we can choose the size of the practice that we run, the number of clients that we feel comfortable helping with, as well as having the technology to help us behind the scenes on the financial planning software, the trading platform, and open architecture, where we can combine both active and passive management, individual stocks with exchange-traded funds and index funds, so that we can build the best possible portfolios that we can for clients without any conflicts of interest.
Wow, that's awesome. There you go. I mean, I think you really gave a very good detailed explanation of kind of how really open architecture and kind of diverse you guys are, which is, I know, definitely benefits your clients. So typically here on the Active Advisor, we like to get the conversation started by asking one simple question. Obviously, this question has a lot more deep meaning, but what is the first memory you have related to money or investing?
Absolutely. So I started thinking about my childhood growing up in communist Albania in the 1980s. And one of the first early memories that comes to me when it comes to money and growing up as a child was shopping for clothes for the first day of school. I remember I was excited to go to first grade. I was the oldest of the 2 children that my parents have, me and my brother. And here in the US, obviously, back to school shopping is popular. You see the ads everywhere, right? And you typically know a couple of months ahead that you better get the backpacks and the clothes and everything else that the children will need to be successful at school. So at the time, this is the late 1980s, 5, 6 years old, and we're going to some of the stores that at the time were still being run by the government. Everything was government controlled. And this was the last couple of years that the communist and socialist regime in Albania was basically crumbling. And at the time, I didn't know it, but there's very few things on the shelves, right? I mean, things that you might have read in the books, right, about former socialist and communist countries. I experienced them. And I remember looking at 3 items on the shelves with my mom and that they didn't have pants that fit me or shoes that were my size. And my parents, obviously being good parents and trying to make sure that I didn't feel that things were missing. They were always glass half full kind of people, very resourceful. And we were lucky that we had grandparents nearby that lived on farms and that they could make do and recycle, whether it's clothes from older cousins and things like that. So they could make me feel special as I was going into first grade. But those memories stand with you that you start looking around and you think like, maybe it shouldn't be like this, but what do I know? I'm a 5, 6 year old child. So that whole idea that the government controls every aspect of your life and that they can control whether there is abundance or shortages kind of resonated with me from an early age. And ultimately, it's something that pushed me towards finding freedom and finding your own path and ultimately coming to the one country that's still the symbol of freedom all around the world, which is the United States.
I'd love to hear, and maybe there's not, but it sounds like you definitely got instilled at a very early age, kind of the value of money and the value of a free market system. After coming here to the States, was there kind of another seminal moment when you were here where you're like, you know what, I think I want to go into finance? Did you have a later stage, obviously, decisive monetary moment?
Absolutely. So once I moved to the US, I spent 1 year as a senior in high school with a host family, graduated from high school, and then I had to figure out a way how to pay my way towards college expenses. And I had a very non-traditional route of pretty much working full-time, 1 or 2 different jobs and going to school at night and on the weekends. And it was a lot of hard work, obviously, when you're working full-time and studying full-time. And as the son of 2 educators, my parents were both educators and they very much valued education. That's something that once you achieve it, nobody can ever take it away from you. And it's an investment that ultimately pays many, many times over. But I also noticed that as I was working, and at the time I'm working with colleagues that were old enough to be my parents. And I realized during those early years while I was pulling myself through college that many people in this country did not have a good grasp on financial topics such as signing up for your 401k and taking advantage of your company match, right? The free money that most of us in our industry kind of take it for granted. But I realized, even being an outsider before I got in this industry, that the general knowledge amongst the typical American, it's very low, unfortunately. And that's something that I realized. I said, wow, this could be something that I could make a difference in educating people as far as on how to make smart financial decisions, whether it's saving automatically through your paychecks, making sure your money's growing in a tax efficient manner, and then knowing how much to save. Are you on track? And how do you pull different levers when you are behind and life throws those curveballs at you? But from an early stage, I realized that there's a lot more that needs to be done. And if I followed that path, which I was always good with numbers, my dad was a math teacher, and I also enjoyed working with people. I kind of put the two and two together of enjoying working with people, teaching the DNA that I have from my parents, and ultimately helping people in an area that I feel there's a tremendous need still to this day.
No, definitely. And I'm glad you kind of went that route because that was actually going to be one of my next questions is really more about your background, the journey that led you to not only the United States, but also your career as an advisor. So I would love to hear a little bit more, but it sounds to me like you definitely learned a set of skills and lessons in Albania. You came over here, and I think you're 100% right. One of the things that the U.S. does a lot of things great. One of the things we don't do, I think, is really kind of teach in our education system about money and investing. And I think it's funny, what I found is that certain people that are drawn to this business, we kind of saw that at an early age, and we kind of like there's a need there to help people. You're teaching, but you're not being an educator.
That's a good way to put it, right? So I remember as a kid telling my parents, I mean, usually a lot of kids want to be like their parents, right? I mean, my dad was one of my very early role models, and he still is to this day. But I also understood from them that being a teacher, it's not a well-paid position, so to speak. I mean, you do it because of your passion, right? And even back home, teaching was considered a noble profession, right? But at the same time, right, you have a family to raise and kids to put through school and things like that. So my parents were giving me options or ideas as far as what to pursue. And they said, listen, teaching is still a great profession. If you want to pursue that, we'll fully support it. But just that comes with sometimes with some drawbacks, right? As far as that, the pay might not be as high as certain other professions. And you got to be really smart with your money, right? And make more to do with less income, right? So if you want to follow a different path, and I mean, you still want to teach and educate, let's figure out something else. And the more I learned about what a financial advisor does and the education that we can provide to hundreds and hundreds of clients and that butterfly effect, right, that we can have as far as to help people, it felt to me that I'm doing my part of following my parents' footsteps as that noble profession, but in a different path that you can still teach, you can still educate, and put people in a position that they can be financially independent. And at some point, they can make their work optional and then truly pursue their passions when you no longer have to worry about earning a paycheck. And then you can write that book, or you can do some research, or spend more time with your grandkids, or help those local charities with your skill sets that now you have. So those are the things that I see through my eyes as an advisor, that based on what we can do for clients, they can do a lot more in their own communities.
No, I think that's great advice. Would love to hear, and maybe we've already touched on this a little bit, but kind of how the experience and kind of coming to the US at 17 as a foreign exchange student, how did that help shape your personal and professional life?
I appreciate it. And that's a good question, because nothing prepares you to leave the world that you've known all your life, right? The first 17 years. And I mean, I'm not even an adult yet, right? And you learn to grow up a little quickly, so to speak. But in those first 17 years, I felt that I was well prepared, that I built a little bit of a strong work ethic from an early age. And I was spending time during the summers at my grandparents' farm. So both of my grandparents on my mother and my father's side, they lived in small villages, and they had cows and sheep and goats and animals. And we as kids, when we were spending our summers there, we all had jobs. I mean, we all had fun, and we had big families. My dad was one of five. My mom was one of four children. And amongst the old uncles and aunts, there was probably 15, 20 cousins. So we didn't spend any time on Xbox or TVs because we didn't have any. This is communism. But we definitely enjoyed the camaraderie, but we all worked, right? I mean, everybody had jobs as far as taking care of the animals, feeding them, helping with during certain crop seasons, as far as picking cherries or apples or pears, and helping grandpa make wine that they could sell at the market. And all of those things that when you do it from an early age, it doesn't feel like work, but you are working. I mean, morning till night. I mean, you wake up at 6 a.m., you're going to bed at 9, and you're exhausted, even as a kid. But at the same time, it was a labor of love, right? I mean, and that's the part that I feel fortunate that we might not have been wealthy by monetary means, but there was a lot of love as far as in those environments that I grew up. So I took that experience to come here, and it's something that my parents and my extended family, I was the first one from my family to move to the US, right, in 1999. I felt like I had this weight on my shoulder, or that this chip on my shoulder, that I wanted to prove them that, hey, here's this proud son and grandson coming to the US to study and chart his own path and hopefully be successful, that I felt that I couldn't fail. Failure was not an option. And I was going to find one way or another how to make it in the US, to achieve my dreams of finishing a college education, building a good career or business. But I came with nothing but a dream. I mean, that was it. And the sheer will to succeed and good work ethic. I mean, that's what I brought with me from the old country. And here, this is a country that at least you will have some opportunities. Nothing will be handed to you. And I mean, I've had to work very, very hard for everything that I have to this day. But at the same time, at least I was given a chance. And that's all we were looking for, as this naive 17-year-old coming to this foreign country. But at the same time, pursuing our passions. And it doesn't matter what your background, religion, skin color was, as long as you're willing to work hard and do the right things, you're going to have a much better chance of making it than a lot of other places in the world.
No, and that's so true. I mean, it's funny growing up and having that farm background. I think you probably instilled in you, well, I know you did, the value of hard work and kind of being able to kind of work till the job gets done. And then kind of one, I think that's definitely something that lends itself well to succeeding in life. So I think spending those first 17 years in Albania, has that international or your international background, we can just say your childhood, influenced your perspective on financial planning and advising? Like, do you look at, when you're looking at, I know one of the things we tend to do here in the States is obviously we're benchmarked to the S&P 500. People don't look at international markets, but there is a whole world out there, and there's several companies, more than several companies, several countries actually. So I'd love to hear, your thoughts on that.
Absolutely. It's a great question. So my background, again, growing up overseas and coming to the US as an international student and having lived here for the last 25 years, it helps me in two different ways. First, with the clients that I serve, I've looked at the current client list, and about a third of them are actually foreign born. So I have a knack for attracting people that have similar background to mine. And I felt fortunate. And I have clients probably from every continent you can think of, right? From South America, Asia, Africa, Europe, of course. And so I'm always curious to hear their story, right? Because a lot of us have very unique and different stories, but there's also a common theme, right, of wanting to make it into a new country and leaving everything that you know behind, which is scary. I mean, it's not easy. But at the same time, them knowing that about me, I think they feel a little bit more at ease that I've been in their shoes, right? So I can understand some of the struggles and I can relate to them and how to help them move forward. And then the secondary part for everybody else, including of course, the non-foreign born clients, which I have many of them, of course, is to help them understand that there's definitely a world of opportunities out there to invest in, right? The US, don't get me wrong, is one of the biggest, obviously, it's the biggest economy, the biggest stock market by market size. And we do a wonderful job of creating companies from scratch here, right? Silicon Valley and New York City and the capitalist system that we've built for the past 240 years. But at the same time, that there's opportunities in far corners of the world that we don't want to ignore and we want to get in earlier. So you want to be open to this ideas, whether a company is starting in Cupertino, California, or in a small country in India or Korea or Africa, we should always be curious. And that's part of what I bring to the table and educating my clients about different opportunities, whether it's a smaller company, international company, or on the fixed income components too, of course, because there's bonds that could make sense on what's happening on certain developing countries that are paying maybe a higher interest rate and the risk adjusted returns make sense. And then when you throw in the dollar fluctuations and currencies, there's unique opportunities that present themselves. And most clients, when you educate them, they appreciate it. And that's something that at least I want to make sure I bring to the table. And we talk about those so that we're not missing anything out there.
That's awesome. I think you're doing your clients a great service by doing that because you're right, there is. I mean, I think we look at the performance and we had tendency just to kind of become myopic in nature.
Absolutely. And the US has been a great country to invest for many years, including the last 10 to 15. But we also know there's a reversion to the mean sometimes, right? And what's been the best performing market sometimes might not be over the next 10 years. And you don't want to have your eggs in one basket, right? So.
Nope, very true. I was talking to an advisor very early on in my career, and he said a lot of people get rich by one stock, but they preserve it and grow it by investing in many.
Absolutely. Great advice. Yeah.
Love to dig a little bit deeper into your current role at Tenured Wealth. So in our conversation, you've mentioned that you've worked with kind of many clients in higher education, healthcare research at the firm. Did your parents, both being teachers, show you the unique financial challenges educators and researchers face? And did that influence kind of the approach you take with your clients?
Yes, absolutely. And especially, I mean, in certain countries, of course, teachers or educators, people that are working in that space, they might not even have the opportunity to invest outside of their pension that maybe they get from their government sponsored job. I mean, that was my parents after working for 30, 35 years that they could earn a pension for the rest of their lives. But in the US, we are unique that we have the Social Security system, of course, which at least is going to provide for a lot of people anywhere from a third to half of their income. But we also have the ability to save, right, in our tax-deferred retirement accounts, which many employers offer very generous contributions. That's the one part that I think we can all do better, especially when we start from an early age. When you start in your 20s, the time that you have ahead of you is the biggest asset, right? You know, when you have 30 to 40 years of tax-deferred compound growth, that's so powerful that you can truly build a very successful plan when you start at an early age, right? But sometimes life doesn't always go according to plan. And people get married, they get divorced, maybe they start later in life, or by the time they get their PhDs, they might be in their late 30s. So suddenly they have a shorter window. That's where we need to be creative too as advisors and meet the client where they're at, right? And ultimately say, hey, this is where you're at, point A, you're trying to get to point B. How do we close these gaps, right? Whether it's by saving a little bit more or making sure that you're getting enough growth in the portfolio. Because something that I've noticed over the years is that people that are drawn to the field of being a professor, educator, or research scientist, they're not the biggest risk takers necessarily when it comes to their investments. So there is a risk there too that they need to understand that by staying too conservative, right, especially when you have 20 or 30 years to go, that comes with a risk in itself, which is your portfolio might not grow enough to afford inflation and the cost of living when you're ready to retire. So that's where I spent some time talking about over the short term, stocks in general can be risky, right? As far as when you look at a 1 year window. But when you look at a 30-year window, holding cash for 30 years is actually riskier, right? Because your purchasing power by far diminishes where stocks, when you look at 20 or 30-year windows, especially when you have a diversified portfolio, there's actually a lot lower risk because your purchasing power will be maintained and growing over time. But you need to take that extra step, I believe, in educating people why they should do that in the first place, what's in it for them, and how is that going to help them and their kids or grandkids down the road. Because sometimes just because they're an expert in their field, right, they might be an expert in 17th century Spanish literature, right, they know everything about that, but they don't necessarily know a whole lot about diversification or getting some extra return and the upside downside participation of a certain investment. That's where my job as the advisor is to break that in plain English, meet the client where they're at, and also understand what's their financial life story too, because everybody has their own unique path of how they got to where they're at when they meet me. So my job is to understand where they came from, where they feel comfortable with money, what's their risk appetite and willingness to take risk, and then how do we build a plan that ultimately is going to achieve their long-term goals while still making sure that they understand what they own in their portfolio, why they own it, and every dollar has a job.
Excellent. Got to ask now, typically there's always one or two stories that kind of stand out or resonate the most with you as an example of that kind of where you really feel, I guess, good about yourself and the job you're doing and how you've made a positive impact on a client's life. Can you touch on one? Obviously, no name, but would love to hear if you have one that pops to mind.
Thank you. And I feel fortunate that I have many of these stories. So over the past 17 years of working as a licensed financial advisor, one of them came early on in my career. This is probably more than 10, 15 years ago, where I was working with this gentleman that had been a janitor at one of the local universities for many years. And he was getting close to what he thought was going to be his retirement age. But this nice gentleman was not very sophisticated when it came to finances, investments. I could tell that he was very nervous, right? And had never really worked with an advisor before. He knew he had a retirement plan to work, had signed up years and years before, but through some moves and whatnot, he had not even accessed his accounts in years, right? So he came in wanting to find out, what do I have in my account? I've heard that you're an advisor, you're working with our plan. I'd like to spend a little bit more time. I want to retire earlier. His mom had been sick lately and he was the sole caretaker. So I said, I'd like to take some time away from work, spend some time with her, and then ultimately do some travel and all this. But I just don't think I can ever retire, right? My dad worked till he died, and I think I'm going to follow his footsteps. So this was the background, right? I sat with him, obviously, asked a bunch of questions to get to know him, who he was. We pull up his accounts, right? We worked on a really in-depth financial plan to make sure that I understood what his expenses he needed to cover, short-term, long-term, risk appetite. We plugged in Social Security projections and all that. And at the end of the second meeting, as I'm delivering the plan and the results, I looked him in the eye and says, hey, you can retire tomorrow. Like, you are in fantastic shape. You've done everything that you're supposed to do along the way. Here's the plan for the next 25, 30 years, however long you live. And you can take care of your mother and do all this. And he just stopped there for 10 seconds, was this like awkward silence. And I'm sitting there like, okay, I think this is good news, right? And you see like a grown man like get emotional, right? I mean, he gave me the biggest bear hug, right? Thank you. This is the best news I could, like I was bracing for the worst, but here I go that you're sharing this good news with me. And I was getting emotional too. I mean, I'm not a guy that gets too emotional, but you see another fellow, like human being there that really feels appreciated. And you can show him that, hey, you can achieve everything that you shared with me. And this is how we're going to do it. And I realized that, I mean, with this job, you can truly make a difference. Now, he could do what he needed to do to take care of his family and his mom, right? His mom could get the kind of care that she needed because he had the means to do it. And those are the stories that kind of keep you coming back, right? Especially during those deep recessions and everybody's stressed and you're the caretaker, of all these clients. But it's all those stories when eventually what they're able to do with their money and the freedom that they have, right? I mean, to ultimately retire on their own terms and take care of all the people that are important in their lives. Like, that's the part that you cannot put enough money into, as far as that feeling that you get that you are truly making a difference. And that's one of the stories that really sticks to me.
That's awesome. That's amazing. We're kind of switching gears. Definitely that's one of those stories that definitely grips you. So we're going to kind of dial it back here just a little bit because I want to touch on something that I mentioned in the intro. I mentioned that your expertise spans the 4 pillars of wealth management. Can you explain why these 4 pillars are essential for financial success?
Thank you. Absolutely. So the 4 pillars that we talk with all our clients as we build our financial plans and ultimately we maintain those plans are asset allocation, which is very important. Again, how ultimately where all their money is invested. That's a key component of a good financial plan. And then for many of my clients that are already in the distribution phase, they're retired, they're living off their portfolio, the income planning, that's very important. Because in retirement, it's not what you earn before taxes, it's what you get to keep after taxes. That's very important. So the income and the asset allocation are what I call the plan A. But then there's two other pillars that are just as important for plan B, which is incapacity planning and ultimately the legacy or the estate planning component, right? Because life doesn't always go according to plan, and sometimes illnesses, accidents happen. And when those primary clients or the decision makers are not able to maintain their financial affairs, right, because they're dealing with major health issues, having that third pillar, the incapacity plan, a plan in place for their finances to be still managed, the distributions to happen so their bills are getting paid, their healthcare needs are being taken care of, their taxes are being filed. And that's something that we are very passionate about, to making sure that we have that plan B in place. And then ultimately, for many of our clients that are very legacy minded, they have both family members as well as charities that are near and dear to their heart that they want, when they pass away, they want to leave a certain amount of money to this families and charities. We educate them and we work side by side with their estate planning attorneys, right, to make sure that their wishes are fulfilled and we have the right mechanism in place for that money to go to the rightful owners ultimately when they're no longer around. So those four pillars are so important no matter the size of the portfolio. We're all human, right? We all need to address them and plan them. And that's something our clients get a very good peace of mind when they have that plan A and plan B in place.
Last thing I want to touch on is your involvement in the community. Can you tell us a bit more about your involvement and what drives your passion for community service?
Absolutely. I'm involved with a few different charities in the community. One of them that I got involved early on was through the Forgotten Harvest, both in Ann Arbor as well as they have locations in Metro Detroit, where they help provide food to families that, of course, are of lower income, and there's a lot of food insecurity in this country. And part of that is probably from me growing up. I shared with you earlier that I saw that from those humble beginnings in communist Albania. But also in this country, as wealthy as we are, and we are the biggest economy in the world, and we have some of the most accesses you can think, there's still many millions of people out there in all our local communities that are struggling, and sometimes they don't know where their next day's or meal is coming from. So that's something that I'd like to give back. And I've also involved my wife and my kids where we do Raymond James Care Days here in May, as well as throughout the year, where we volunteer our time to pack food for many of these families that absolutely need the help, as well as raising funds for these charities. So that's one aspect. Another charity that I'm very passionate about actually has to do with providing scholarships to first generation students here in Metro Detroit. It's called the Girish Castrioti Scholarship Fund, which is named after Albania's national hero from the 1400s. And this scholarship fund has been around for over 20, 25 years here in Metro Detroit. And I can relate to that struggle because I was one of those students that was juggling tuition payments between two or three different credit cards and borrowing from family members or from credit cards or student loans to figure out a way to pay for my education. And it can be very stressful. So what we do as an Albanian community in Metro Detroit, many of us that are fortunate that we are in a better place now financially, we give back by raising funds and holding different events where each year, actually this past year, we just gave over $75,000 in scholarships and funds to some really deserving students that many of them are the first from their families to go to college, to ease that burden of the cost of tuition and education. And more than that, too, we also provide them with mentorships. So I've helped quite a few students through the scholarship fund where maybe they're studying finance at the local, Michigan State University or Oakland, and they're considering a path, right, to be a financial advisor. We have conversations over coffee or lunch about kind of my path and like what I did well, what I would do different, so that they can learn from what works and hopefully avoid some of the stuff that I learned the hard way. So those are a couple of the charities that I definitely support and that they make a big difference in our communities.
That's awesome. And I'm sure, it's like you mentioned earlier, the butterfly effect, and that it's really, I think this has really been a pleasure, speaking with you today. And I think it's one of those things, it's nice to see people give back and kind of help the community. So,
Thank you.
And by the way, take care of all your clients too. I mean, that's,
that's number one job.
Exactly. That's the number one job, right? Final question for you. At Harbor, we're firm believers in active management, though it's important to acknowledge that every financial expert has their own unique perspective. From your experience, what is your take on active management and where have you seen it making the most significant difference?
Absolutely. And I agree with your assessment that there is room on a client's financial plan in their portfolio for both active and passive management, right? There is some parts of the markets that are very efficient. I can think of like the S&P 500, right? The information gets passed on very quickly. And there might not be as much room for necessarily an active manager to provide value. So that's where passive management index funds or exchange traded funds make a lot of sense because they cut down the cost. They can cut down some of the tax implications. But there's also parts of the market like the small cap stocks or emerging markets or certain fixed income sectors that an active manager that's experienced, that has the boots in the ground and that they're seeing what's happening, as far as in those particular countries or cities, that it would be very hard to find that information through a passive fund or an index. And that's where I believe active management definitely makes a difference to find those opportunities. We were talking earlier, some of those hidden opportunities that could be in plain sight, but also navigate some of the risks too, whether it's a geopolitical, a government being overthrown, or a currency defaulting. That's where, again, an active manager could definitely sniff that out earlier and protect their clients' money and my clients' money by being one of the earliest to get in or earlier to get out. So I believe that there's room, inside clients' portfolios for both active and passive. And at the end of the day, they can coexist together to achieve a successful financial outcome.
Completely agree. Thank you very much. Now we're going to go on to my favorite part, which is 60 Seconds with Erold Merko. Let me know when you're ready.
I'm ready.
Nickname.
Gary.
Hidden talent.
I'm a chess player.
If you could instantly become an expert in anything, what would it be?
Learning more foreign languages so I can communicate with clients and other people in different languages.
Best professional advice you've ever received?
Take care of your clients. Don't worry about the money, because if you do the right thing by them, the money and the success will follow.
Favorite Albanian dish that you wish everyone could try?
Correct.
What never fails to make you laugh?
A good stand-up comedian.
Most rewarding part of your job?
Seeing the clients when they ultimately retire after so many years and decades of working, truly enjoy checking off those bucket list items that they have listed for years. It's very rewarding.
Favorite way to get active?
I like walking both around the neighborhood, around the golf course. I also like the Peloton. That's been my favorite way to get my cardio and the heart rate up.